Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 14th of December, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. And what a week it's been, Phil. The country went to the polls on Thursday, voted decisively for a Conservative government, which means the UK coming out of the EU at the end of next month. So that's becoming a reality, which, of course, is going to have an impact on businesses across the country, especially those in the car retailing sector.
Absolutely. So before we get onto the headlines, we've got a very special guest on who's joined us this morning, and he's going to talk us through how the result will impact the sector, to be fair, from an automotive perspective. So welcome to the show. We've got Mike Allen, who is the head of research at Zeus Capital. So good morning, Mike, and it's been a while since you've been on, hasn't it?
Good morning. Yes, it has been a while, actually.
Yeah, early days. You were part of the early podcasts.
Yeah. So Good morning, Mike. Great to have you back on the podcast. Now, listeners will be familiar with you from various presentations you've given at industry conferences over the years, and of course regular comments in the press around dealer performance. And you and I have spoken many times over the years about market trends, especially relating to listed groups, which of course is a major focus for you. So we thought it would be useful for listeners to hear your take on how the election results could actually impact the sector over the coming months and indeed, I guess, the next 5 years. So the first question for you, we've seen how sterling rallied when the results were announced, but how would you say the city has reacted?
Well, I think the city have acted positively in this. I think, sterling is a big barometer in terms of confidence in our economy and also overseas, how overseas perceives the UK performance as well, their future performance. And clearly, as you say, sterling has reacted positively. And that has filtered down into share prices this morning as well, which is good news. I think, one thing the stock markets never like is uncertainty. And I think in the run-up to the election, there was clearly a lot of very, very different scenarios that could have played out. But now the fact that there is a clear majority in place, there is a plan to get the Brexit process moving. I think nobody's saying Brexit's going to be done and dusted, completed by the end of January. But there is a plan there, and I think, investors can now follow that progress without having to price in any other different scenarios, which has been unsettling.
So as you say, Curtis said right there, we've now got a Conservative government empowered, and as you say, with a clear mandate plan to get on with Brexit. And what do you think this will mean for particularly the UK automotive sector, and specifically looking at car makers manufacturing in the UK and exporting to the EU?
Yeah, I think the last 3 years has been really tricky for the sector, for dealers, manufacturers alike. I think it's been impossible to try and second-guess what sterling could do as well. Just going back to those different scenarios that could have played out, and people not realising, will there be a deal, what does it mean, etc. It's quite interesting this morning, just going through what some of the economists have been looking at, and now that they can see some certainty, I think some of the economists I respect are looking for GDP growth of about 1% next year, rising to about 1.8% in 2021. With a dollar rate of about 135 towards 140. And a euro rate, from 123 moving towards 130. Now, if we get those type of ingredients that play through in the economy, they are forecasts at the moment. But if you look back at the last 20, 25 years, if we've got a strong pound and, UK GDP growth was north of 1.5%, that's normally good. That's normally a good barometer for new car performance. And don't forget, the last 3 years, we have had some, weakness there as well. So there should be some pent-up demand in the background as well. So I'm not saying there's a clear path to that. I'm not saying Brexit's going to be done. Of course, there's going to be uncertainties along the way with trade agreements, etc. But at least now we can see a kind of pathway of working towards getting a Brexit resolved. And don't forget, with the majority that's come through for the Conservatives as well, that's been voted by the people. So from a consumer confidence standpoint, they've been given what they voted for. So, it's clear as well that the UK consumer wanted an end to this uncertainty and wanted to get on with their lives, whether they were Remainers or not. So I think it's good news from a number of perspectives, and it's certainly an improvement in the picture that we might have seen 24 hours ago.
Yeah, and following on from that, Mike, I mean, we've been reporting about this on the podcast over the course of the year. Brexit has been blamed for much of the consumer uncertainty, which has held back some car purchases over the course of the year. Do you think car dealers can now expect to see an uplift in consumer confidence?
Yeah, I don't think it was just about Brexit. I think it was more about uncertainty and people voting for wildly different scenarios, politicians, looking at going about things in completely different ways. You can't blame the UK consumer for being confused over the last 12, 24 months.
Yeah.
So I think Brexit is a part of that, and uncertainty that impacted sterling and that weakened sterling was definitely a part of that as well. But one of the big things we've been talking about over the last 12 months is the cost of change on PCP contracts. So when we've been looking at deals from 2015, 2016, when the pound euro was 125 plus, the deals there were very, very competitive. Yeah. And when we were looking at the current deals in 2019, we just weren't getting the same dealer contributions coming through. And either the customer had to put in a lot higher deposit, or the monthly payments were increased by 30, 40%. And that was on flat interest rates. So I would hope, and this will take a few months to play through, but if the pound kind of rallies against sterling, then perhaps the OEMs will invest some of that in as a dealer contribution to help re-stimulate the UK consumer. Because I think, the consumers that have been locked in PCP deals may well have been looking at alternative products at the moment. So it's going to be interesting to see how the various manufacturers deal with this. And I guess that at the moment they're going to want to see whether these sterling rates stick at the moment before they make any longer term decisions.
Yeah, good point. And I mean, last week we had Matt Lavery on from Cambria Group, and he was obviously talking through some of their sort of growth investment results that they've had. But obviously now we're talking about this decision here, and how do you think the result will influence investment decisions amongst the sort of listed groups, and can we expect to see more growth and more M&A activity in the UK?
Well, I think the first point is that the share prices, I think, have to increase and they have to stick. I think it's difficult for the PLC dealer groups to pay multiples higher than their own at the moment, because that just won't work from a shareholder return perspective. However, if the rally that we see this morning continues and filters through, and we can see improving trading patterns in the new car market, and the increase in sterling kind of deters overseas buyers as well, because, I think part of the overseas consolidation was probably about the pound being cheap as well. Then I think the UK PLC companies are in a good position to start to consolidate a bit further as well, because obviously activity levels have been a bit lower in the run up to Brexit. So I think the share prices have to move, and then once we see Brexit, edging closer, and we get that increase in GDP from 1%, going towards 2% in 2021, then I'd expect to see, a lot more consolidation. And actually, I think it'll be very value accretive, as I think some of the companies might have been, some of the smaller companies might have been distressed this year in what's been a tough year. And I still think more likely to see capacity come out of the market. So I think the UK PLC companies, if this plays through as what some of the economists think, then it should be positive for them.
So, Mike, the final question for you, and it really follows on from the points you've just made there. And as we enter 2020, are you more or less confident about the sector and how it will perform than you were before the election?
Yeah, I mean, I think the first point I'd probably make, Curtis, is, I mean, we've seen a kind of a big variance in PLC performance this year. There have been kind of one-off significant profit warnings, company-specific issues. You've seen companies like Cambria that's grown significantly versus last year, as they've made very good expansion into other parts of the market. And you've seen Virtue Marshalls that have been very good on cost control and grinded out, really good solid performances as well. They're also well-managed businesses. So there's a variance. It's hard to generalise at the moment. But I was very cautious about the first quarter, just because I could sense the election uncertainty was definitely hitting consumer confidence, and it was definitely impacting the economy as well. And I think if we would have had a hung parliament or another referendum, I think that uncertainty probably would have led us into recession. However, I think with the clear majority that's now in place, with most people wanting to get the kind of job done and to focus on the medium term, I've got to be more positive than that. However, as you both know, such changes, can take time to filter through into the market. So, I'd still be a little bit cautious about Q1, but I'd like to think, the sterling increases stick, and hopefully in time for a good March. That'll be a key barometer we'd be looking for. But I've got to be more optimistic based on the election result we had yesterday.
Yeah, brilliant. I mean, there is, like you say, Mike, there's still a lot to do, isn't there? There's still a we've got the decision now. It's time to move forward. But like you say, there's still a lot to decide and a lot of decisions to make and a lot to do. So, but just finally, thanks for joining us this morning and coming back on the podcast and giving us some welcome analysis and context to the election and how it may play out, particularly for the automotive car retailing in sector. So much appreciated, and obviously we'll look forward to speaking to you again in the new year, hopefully.
Yeah, no problem. I'm a big fan of this podcast, and I am a weekly avid listener, so I always learn something. So no problem.
You listen to us whilst you're running, don't you, Mike?
I do sometimes. It's not every week, but I do sometimes.
Yeah, well, keep on running, Mike, and many thanks for coming on to the podcast this morning. There's some great insight there, and we're certainly in for some interesting months ahead, as you've alluded to.
Yeah, thanks, Mike.
Exactly.
Have a fantastic Christmas and New Year to you and the family, and I'm sure we'll speak again soon in the new year.
No doubt. Thanks, guys.
See you later.
So, Phil, we better get the podcast done now. We better get on with the week's other headlines.
Yeah, it's going to be interesting to see what next week's headlines are once all this starts to settle. But we've got some good headlines for this week, haven't we? To start,
we have, yeah. And I'm kind of thinking of a new feature for the show. Where do you listen to the podcast? Because we know Mike from time to time does listen to it whilst he's running. There's other dealer group bosses who listen over their cornflakes. So maybe we ought to reach out and find out where others listen to us.
We may not want to know some of the answers, so we need to be very cautious.
We'll vet them. We'll vet them heavily.
We will need to. So the first story is we're going to talk about it's a story from Business Car this time, and I think it's their first time on the podcast. I think Business Car.
It is, yeah, a welcome debut.
And so we've talked about the Mannheim performance in looking at November, and really it's really looking at that fleet sector, and the headline is Mannheim reports rising prices for fleet vehicles. So that's talking about that the average price for fleet vehicles going through Mannheim rose by 4.2% in November, and they're looking at that the average sale price went up to 10,687, and some of that can be attributed to the same analysis that the average age and the average mileage fell slightly, which obviously then looks like it's newer, more expensive vehicles coming through the lane. So to me, it's sort of the signs of what you describe as green shoots from what's been a challenging year for the fleet sector. We talk about earlier on in the year, and with people are sick to death of listening to us now on the podcast talk about WLTP and RDE and that world, but the fleet sector really did feel the pain of that, one around the supply, then the uncertainty and lack of clarity around the BIK rulings and tables and costing. So there was, earlier on in the year, we saw in the autumn budget, there was a sort of a bit of clarity around the BIK tables and charges, so that's sort of shown a little bit of welcome result. And on the back of that, there is some activity taking place, obviously, as we've spoken about previously on the podcast, from manufacturers that are looking at getting their vehicles into registrations for 2019 and keep them away from 2020, and that might have stimulated some of this change cycle within the fleet sector. I don't know, what did you think on this one?
Well, I guess my question to you on this, Phil, would be we're actually seeing more defleet activity, aren't we? Because a lot of businesses were holding back because, as you were saying about the company car benefit in kind rules, they were all under review, they were being changed. So there has been a bit of pent-up demand, hasn't there? And these vehicles, these defleets, we're just starting to see coming through in, I guess, serious volumes.
Yeah. And actually, it'd be worth not covering them on this week's podcast, but there's been a couple of stories on fleet news this week as well. It started off talking about the pre-election. There was a concern, depending on what the result were, following the rubber stamping of the BIK tables in the autumn budget, and whether that would, depending on the outcome of the election and the mandates from the government, that would possibly get reviewed and things like that. And they have actually followed up very quickly following that, saying that Tory wing gives company car tax certainty. So I think Fleet News feel and the fleet sector feel that this week's result has given a little bit more confidence that the changes to the benefit in kind that happened earlier on in the year could possibly remain and keep that fleet sector stimulated and see activity continue in that fleet sector.
Yeah, and it really goes back to what Mike was saying about some certainty. There's more certainty in that part of the market now, because there was certainly plenty of uncertainty around those new rules. So we pretty much know that they will be introduced. They're certainly not going to be removed, which was a possibility. So that's welcome news.
Yeah, and the next story came out this week, didn't it? I mean, this one did create some social discussions, should we say, in the media. And again, kind of this consumer media sensationalism and trying to look at other things, and it comes from the BBC news, and this was that a rise of SUVs makes mockery of electric car push, and they're talking about the immense rise in sales of the high emission sports utility vehicles means they now outsell electric cars in the UK by 37-1. But we know that the EV sector is growing from a very low base point. We know that the SUV sector has grown over some years. I mean, in reality, the SUV sector has actually slowed down in growth over recent years. I mean, it's a few years back when we saw the real spurt of growth within that SUV sector, but we know that the manufacturers are bringing in hybrids into that SUV sector. We know that, it's not all about that large four-wheel drive vehicle. It's a crossover now. It's that lifestyle vehicle. So I think they've sort of painting a bit of a sensational broad brush to this one. I don't know what your thoughts are on it.
Yeah, no, I agree totally, because I posted this on LinkedIn and got some interesting responses. The research was done by the UK Energy Research Centre, which is a government-funded body. Now, you could argue it's the same government that has helped demonise diesels. So a lot of these SUV sales come from buyers who maybe were going around in five-door hatchbacks, diesel hatchbacks. They decided that diesel wasn't the fuel for them because of all the negative press they were reading, and they've looked for new vehicles. And undoubtedly, some of them did turn to SUVs. Now, the way that the SUVs are demonised in this particular story, talking about demonisation again, is that they're all big, heavy gas guzzlers, which they're not. No. That's just not the case. So this story and indeed the research, I think, misses an awful lot of points, and it does kind of infer that the SUV boom has just happened suddenly, but it hasn't. SUVs, crossovers. We can go back to the mid 2000s, the early RAV4s and things like that. This isn't a new phenomenon, and as you say, it is levelling out.
Yeah.
So I would send the UK Energy Research Centre back to the drawing board on this one. Try harder next time, I think.
Yeah, it's a bit of a story, that one. Like I say, it's a bit of a sensational headline grabber potentially on that one, and again, sort of looking for that demonisation, as we well know. So moving on, actually, the next story is talking about that the hybrid car demand is outstripping dealer supply by 8-1, interestingly. So maybe we should send this article across to the BBC News and send that one. So this is come from some analysis that they've looked at, that car retailers have been advised to hunt down hybrid used car stock after research reveals that consumer demand for the alternative fuel vehicle is outstripping demand by 8-1, and that's where that they're looking at analysing hundreds of customer searches and dealer adverts listed on the CarSnip online marketing portal.
Yeah, which found that 16% of searches in November were actually for hybrids, and that was up 30% in the month. But only 2% of listed cars were actually hybrids. So this is indicating the dilemma faced by dealers and indeed car buyers who, dealers want to get hold of these cars to sell them, and there is a receptive audience out there for them. So it's all supply and demand at the moment.
Yeah, and actually in the story, and this is let's say AM Online, and this is a story by our good friend Tom Sharp there, and they do refer to the UK ERC, and they talk about that the Professor Gillian Enable, I think she's called. So they're talking about that they must immediately start to phase out the most polluting vehicles. So yeah, it's, again, they're talking about that. They've pointed out that battery electric cars are less than 1% of the UK market. But I think we've talked about on recent podcasts that, we know that what's coming next year with the CAFE legislation. We know that the manufacturers are really focused on the EV sector in terms of model derivatives entering the market. Interestingly, when you actually do talk to the network, that it's actually there's some people feel that we're actually going to see an increase in diesel vehicles because obviously they are lower polluting in terms of a CO2 perspective, and actually you might see a demonisation of petrol, which if the consumers aren't confused now, they may certainly be next year, if nothing else. So it's going to be definitely one that is going to be watched because there's different agendas in there across the manufacturers into the government and the UK. So it's going to get very, very confusing as we move through time.
Yeah, it is indeed. So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector. So our next headline, Phil, is from Motor Trader, and it's Auto Trader names UK dealers slower selling used cars in 2019. Now, we love a top 10 in the show, don't we? So I think, to crack on with things, maybe if we do a top and bottom 5 for these. So the slowest selling used cars in 2019, according to Auto Trader, the 5th position car was the Subaru Impreza. Number 4, Citroen C4 Picasso. Number 3, the 2017 Subaru Impreza, and it's not a great year for Subaru or the Impreza because the 2019 model Subaru Impreza is at number 2, and the number one slowest selling car in the UK this year was the Citroen C4 Cactus, which averaged 148 days to sell.
But that beautiful looking Citroen C4 Cactus.
I can't understand why.
I mean, the Subaru Impreza, I can logically understand some of that. I mean, they're not everybody's car that you get somebody on your website or your forecourt on a daily basis looking for something that sits in that sector that they would happily drive away in a Subaru Impreza. It is a little bit more unique in a certain way. I don't think it's at the top of the majority of car buyers' shopping lists, but they are obviously in demand. But obviously they were never a high volume car in the new car marketplace, and therefore they're not a massive volume vehicle in the used car marketplace. So it's interesting, but like you say, that 2017, 2018, and 2019 model years have struggled, haven't they, through
I tell you the one that surprised me. It's at number 6, the 2019 Nissan Micra. So this was the new look Nissan Micra, and that's taking 145 days to sell. Now, I drove that car on the launch, and I was hugely impressed. I mean, it is a really, really good car. And I liked the look of it because it's totally different from the one it replaced. But the thing is, you see them on the roads and you just don't notice them because it doesn't look like a Micra.
Yeah. I mean, what I would say, though, it is the diesel model as well. In the super mini sector, city car super mini sector. So again, many years ago, there was a slim down of the diesel derivatives in that smaller vehicle sectors of both city car and super mini. So maybe there is something there that it is a diesel in that sector that hasn't helped.
Yep. Do you want to know the 5 fastest sellers? Okay. So there's a bit of repetition here because Renault featured quite heavily in the top 5. But number 5, the 2016 Seat Alhambra diesel automatic. Number 4, the 2016 Renault Zoe, obviously electric. Number 3, here's one for you, the 2016 MG6 diesel manual, averaging 27 days to sell. Number 2, the the 2017 Renault Zoe, averaging 27 days to sell. And the fastest selling used car of the year was the 2015 Renault Zoe, and that was averaging 26 days to sell.
Yeah, I mean, from an analysis and data person, as you know I am, I think it'd be interesting to see the volumes and the supporting data around some of these numbers and top and bottom performers, because I think a lot of this may be down to supply and volume in the market that is determining that predicted days to sell. So again, without being too cynical from a data perspective, I think the Renault Zoe isn't the most highest production vehicle, particularly in the electric vehicle sector. So there may be some connection around supply and demand that is driving some of these days to sell and average rating. But I'm sure some of the people listening to the podcast this morning will have an opinion, and it'll be great. Please, it'll be on the social channels, as you know. Put your comments. It'd be great to hear some comments and some debate around this one. And then moving on, Car Dealer magazine. So they're on the list this week, and is that Suzuki tops dealers honoured at a glittering ceremony. And I think a good friend of ours was involved with that one.
Indeed, yes. Robin Luscombe Suzuki Leeds, was awarded the National Dealer of the Year. So that is awarded for the second time, I think. Yeah. So well done to Robin and the team there. Robin obviously went to social media and mentioned it quite heavily during the week. So good on him. Great achievement. And this is quite an interesting story, because it actually shows the longevity of the Suzuki network, with some dealers representing the brand for 10 years going up to 40 years. So 40 years, that's Colin Appleyard's, Keithley and Gordon Motors in Perthshire. So they've been with the brand all that time, and it is a very loyal, and we know from the surveys, the NFDA surveys, a very loyal and happy network. So that must have been a great event, for the brand and indeed the network.
Yeah, no, you're right. I mean, they're out in Tenerife, and they recognise this, and we know, like you say there, you've referenced it there. There is a good relationship between the Suzuki and the Suzuki dealer network. They do support each other very well. We've had Dale Wyatt on the podcast a while ago, and I've met him a number of times since, and they do work hard with their dealer network, and like you say, a very loyal network to have some of those dealers for so long. And like you say, I mean, my territory up here is obviously with people like Robin Luscombe and people like Colin Appleyard that you've mentioned there over in Keithley, and they've just stayed with the brand, and the brand has grown. As you remember years ago, I mean, they were never a high volume new car vehicle, and they always struggled getting those used cars, and now it's grown and grown and grown, and now they can sustain a reasonable used car business from the new car business. So it's great to see that Suzuki has grown so well over the years.
Yeah, and before Robin starts throwing anything at the radio, it's actually the fourth time that he's won National Dealer of the Year. So that's pretty outstanding, because they've only represented the brand since 2010. So that really is good going.
Oh, well done, guys. Well done. And then we've got and finally this week that you've managed to find, and it's from our friends at Motoring Research there, and Italian airport has new Lamborghini for planes to follow. That'd be interesting. That makes me want to go there.
Yeah, definitely. So anyone arriving at Bologna Airport, the first car they see is the Follow Me car, which is this sort of bright orange Lamborghini, which it's Lamborghini Huracan, which costs 238 £8,000. Now, anyone flying into Gatwick will probably see, I don't know, a Fiesta or Corsa as a follow me car, but this is this car, and I do urge you to go over to the websites, the motoring research websites, have a look at the pics, because they are brilliant. So it's bright orange, it's deckled in the Italian flag, and it's actually got the warning lights on it as well, orange warning lights. You can see it parked up next to the planes that follow it in. So, can you imagine? What a great piece of marketing for Lamborghini there.
Can you imagine the employee? It's like, who wants to drive? I'll go and do the follow me car today. I'll do it this week. There'll be a queue, won't there, for who's going to be doing the follow me car on for the planes coming in. I'm not sure that the queue would be as long over in the UK, possibly.
Yeah, and you do rather sense that when the airport is quiet and the runway is empty, well, you wouldn't you?
You would, yes, yeah, you'd want to, wouldn't you? Just get down that runway and just see what you can get out of the hurricane there. I wonder how many people have possibly lost their jobs for trying it. But anyway, yes, fantastic. So I think that's it for this week, isn't it? That's a good show, great interview there with Mike Allen from Zeus Capital, and it was great to have him back on and definitely put a bit of context into this week's results and really focusing on what the outcome and possibilities are for the UK automotive sector, and hope that helped people this morning. And when we referred to the earlier interview that was last week with Mark Lavery from Cambria, if you haven't managed to listen to that one, very, very insightful interview there with Mark, as you said in the show there, Curtis. Very open and great to get his knowledge and his view and put a bit of context as to what those guys are up to at Cambria.
Yeah, that's absolutely right. It's worth listening back to that. It's still available, and it's right at the beginning of the show. So, if you've got a spare 10 minutes or so to spare over the weekend, do head back to that. So, that's about it from us, Phil, isn't it?
It is for this week. Yeah, that's it. So we have got another one next week. So we are back on just before Christmas. So we are returning next Saturday. And hopefully we'll have some more exclusives and possibly an interview as well.
Yep, so you've been listening to Motor Trade Radio in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing on iTunes, Google Play, Deezer, SoundCloud and YouTube, unless you've added any more over the last week or so.
I haven't, no. I mean, there is Libsyn, which is what it gets produced on, and you can subscribe to Libsyn as well, but no, it's great. The feedback is that it's very positive that we are now on things like Deezer, because actually there's a lot of people do listen to things on Deezer and one there, and the normal iTunes, etc. as well. So thanks for everybody that does subscribe and does tune in on a weekly basis. So that's it for this week, Curtis. So we're again, let's say, next week, and hopefully we've got another interview and some more exclusives for us next Saturday, and look forward to seeing what's been happening during the week, and we'll join us again next Saturday.
Yeah, thanks a lot, Phil, and we'll catch up with you again next week. See you all.